Hi, everyone. Thank you so much for joining us today. From airfare to appliances to used cars, prices are on the rise. Today, we are talking to a company that uses inflation to its advantage. Well, Forbes has declared commodities as the #1 investment for 2021. But how do you get the most bang for your buck? Royalty companies have outperformed physical metals, mining companies, and the S&P 500 over the last decade. Today, we're joined by Vox Royalties CEO Kyle Floyd and Vice President of Corporate Development, Simon Cooper. Hello, gentlemen.
Hey, Cindy. Good to be with you.
Good to be with you too. Hi there. All right. Well, Vox Royalty has caught the attention of several analysts at different brokerage firms. It's got a buy recommendation from Cantor Fitzgerald, Red Cloud Securities, and Paradigm Capital. The one-year target price ranges from $4.25 to $5. The stock is up today, but it still appears to be a really good deal at the moment. So, Kyle, I want to start with you. Why should an investor look at a royalty company rather than just picking a gold, silver, or copper company that they like?
Well, as you mentioned, Cindy, royalty companies have outperformed really any commodity-based benchmark over the last 20 years, and especially in these inflationary environments like we find ourselves today. And so Vox was created to really capture that alpha in the commodity sector. And one of the ways that we do that for investors is that we are able to cherry pick the best assets that have royalties linked to them. So thousands and thousands of assets that have royalties over these projects, we're able to scrutinize with our technical team and pick the very best to bring into our portfolio in a royalty structure. And when you back test data in the industry, royalties have been really the preeminent structure for capturing value in the commodity sector. And so Vox delivers that for our investors in spades.
Okay, well, we mentioned inflation. It is raging right now. So how can Vox offer investors a safe place to grow their capital?
Yeah, it's a great question. And many investors are confused by some of the challenges that inflation creates. One of those big challenges is when you invest in mining companies, their cost structure is usually very significant and significantly exposed to inflationary pressure. A lot of their inputs, their cost inputs, are also exposed significantly to inflation. For Vox, we're not, because our interest in these operations is at the top line, the revenue and production of these assets. It's not exposed to inflation from a cost perspective. And so that's a huge benefit that investors get with a royalty company like Vox versus owning a mining company. The other benefit for Vox is that we're not exposed to the dilution at the underlying asset level when these companies go and raise capital to further develop these operations, because usually the inflationary pressure is also driving up commodity prices. So they're more incentivized to go out and build their assets and bring more assets into production. So we're getting the benefit of that growth without the dilution and also without the exposure to rising cost pressure on these mining operations.
All right, Simon, I have a question for you. Explain how Vox's business model allows it to offer risk downside and dramatic upside.
Yeah, absolutely. So the royalty business model and our business at Vox is unique in that you have this built-in risk mitigation. So when you buy Vox, you're inherently buying a diverse portfolio of over 50 royalties globally. So you have this built-in portfolio effect that helps to mitigate against that single asset risk. Taking that one step further, we've built a really strong technical team of mining engineers and geologists who, I guess, operate on the front lines of our business development efforts. So we place a really heavy emphasis on due diligence, on identifying and mitigating risks when we look to invest. And then to the upside part of the equation, again, when we're looking at projects, we're looking for that built-in upside. We look for catalysts that are going to fundamentally, change the value of the royalties at which we're looking to acquire. So that may be through things like resource upside. And in particular, we've got over 110,000 meters of drilling across just some of our key gold assets this year. It may be through looking at different development catalysts. A great example is the Segulola gold royalty that we have. That's going to have first gold pour in the next couple of months. Or it may be through looking at the potential for increases in production. Again, what we're seeing out of one of our producing iron ore assets is that they're looking to potentially ramp up production there. So all of that adds value to our shareholders at no extra cost to Vox. And it really just highlights the benefits of the royalty model in action.
All right, Kyle, how much of one's portfolio do you believe people should devote to commodities?
Yes, Cindy, the leading analysts, wealth managers have said for years that 2 to 5% of one's net asset value, so a complete portfolio that includes real estate and other asset classes, should be devoted to commodities. I think by and large, most investors, both at an individual level and at a global wealth manager level, have not really stayed true to that. And so that 2 to 5% probably sees a pretty big rotation as consumers and investors wake up to inflation. So I think there's a lot of room to run for commodity linked stocks such as Vox, where investors are rotating into commodity linked plays where they really haven't built that exposure that they need to have to protect themselves during an inflationary environment.
And Simon, what commodities does Vox hold royalties over?
Yeah, so firstly, probably important to emphasize that we are a precious metals focused royalty company. So we've got royalties right across the suite of different precious metals, heavily weighted towards gold, but plenty of exposure to other precious metals, including silver through one of the largest undeveloped primary silver projects in Australia, the Bowdens project. And then we've also got platinum group metal exposure through a royalty on one of the largest and most advanced PGM districts in South America, which is the Pedra Branca project. So about 75 to 80% of the portfolio currently weighted to precious, and we plan to continue that weighting. What's interesting is that we are also opportunistic when it comes to acquiring royalties over different commodities. So we have royalties over base metal assets, copper, lead, zinc. We've got royalties over battery metal in cobalt, graphite, nickel sulfides, some specialty metals in there, vanadium and titanium, and we've got a producing iron ore asset as well. So I guess what that does is it just continues to add a little further diversification in terms of that mix of commodities.
You may have just answered my next question. Simon, how does your royalty portfolio give an advantage to investors looking to gain more exposure to the price upside in these metals?
Yeah, absolutely. I guess the immediate benefit to us in a high price environment, or where that sort of upside with respect to price kicks in, is for those royalties that we have in the portfolio that are paying, we see increased revenue immediately from those. So it's really the cherry on the cake. But also in a high price environment, you see, in a healthy commodity environment, you see a couple of interesting things happen. You see operating counterparties that have very healthy balance sheets, that are very well capitalized. They're then able to deploy that capital into advancing their projects at a breakneck speed if they're in development stage. Or again, if they're producing assets, you may see them, well, if they're producing assets, we're going to see that immediate like increase in revenue. And we may also see them to look at increasing production. Again, all of that flows on to Vox and our shareholders. We're seeing those catalysts play out now, particularly in places like Western Australia, where we have a big part of our portfolio. And in relative terms, the Australian dollar gold environment is still very healthy and very buoyant.
So Kyle, why should investors buy Vox now?
Look, right now, Vox is trading at a discount to our peers, and we've never had more delineated growth in front of us in really all capacities that matter for a royalty company. Royalties acquired, resources and reserves increasing, production increasing, and that resulting in cash flow increasing. And so we're on an exponential ramp in terms of revenue and cash flow, and that's very, very significant for investors, albeit trading at a discount to many of our peers that don't have any semblance of the growth that Vox represents, just at an organic level, what's in our portfolio now. So when you buy Vox, you're buying it amidst a very significant catalyst run that we have in front of us and very, very tangible growth.
Yeah, impressive numbers for sure. Gentlemen, thank you both very much for joining us today.
Our pleasure. Thanks, Cindy, for having us.
And thank you.
Really appreciate it.
And thank you at home for watching Vox Royalty. If you want more information and for the latest company news, please hit the subscribe button below and give us a thumbs up. Have a great day, everyone. Bye-bye.